In this video, I'm going to show you exactly how I'm trading stocks for which I'm considerably down, and we're generating weekly covered call premiums to pick up those little crumbs while this market trades sideways to higher. I show the members exactly how we're doing this using the expected stock move calculator. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we are going to talk about a stock for which I am literally kicked in the nads. I'm down like everyone else. And SOXL is a trade for which I'm down. Right now, I'm in SOXL anywhere from 30 to 31, 32. I even have a position at 34. We were selling covered calls and out of the money covered calls and never had our shares taken away. And then came February 25th when the president spoke in front of Congress, and next thing you know, we are falling some 11% on the S&P 500, and then comes the tariff talk. And of course, my leveraged ETFs fall about 3 times that. So yes, when the stock market falls 21%, leveraged ETFs are going to fall 3 times that. Now, if you were able to somehow avoid that wreck, well, I tip my hat to you. Most of us didn't, and we have to deal. Now, the only way we deal is to sit on our hands, mope, and coulda, woulda, shoulda. Or you could take the other approach where you use a tool that I've created and I offered up to the members. It's called the Expected Stock Move Calculator. And what we do is this. Anytime we do a poor man's covered call, we usually use the expected stock move calculator for every single strike because you don't want your shares taken away in a short time frame with the poor man's covered call because your Leaps call option may have so much time value in it, you would lose money. Even though the stock moved higher, you would lose money. Now, that expected stock move calculator is great for the poor man's covered call trade, which I show my members. We can use it for a deep out of the money cover call strike, picking that perfect strike where we can expect the stock to move if everything were normal, no violent moves in the stock market, for which I believe right now we're not going to experience, at least in the next week. This trade that I'm going to show you here is a 1-week trade. Today being the last trading day of this week, we went ahead and picked the expiration for the next Friday. We're going to use a stock for which I am down like 60%. We're going to go ahead and pick a strike price using the expected stock move calculator. I'm going to show you that right now. So, hey, look, if there's anything you like in this video, I want you to subscribe to the channel. I come back every week, show you timely and relevant cover call trades to put cash flow in our wallet, even in these markets. And then we can buy a dividend paying stock like I'm going to show you here at the end. We do this because we go from the trade mindset to the wealth mindset real quick when we have passive investments paying us weekly, even in this falling stock market. So hey, look, if you like this video, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. I'm talking about SOXL. It is a 3x leverage ETF to the semiconductors, for which they have all been hit over the head with the Louisville slugger. And I'll tell you what, the semiconductors have been beaten up a little extra because of the tariffs. Well, there's been some relief with the tariffs, and of course, the semiconductors all rallied. Well, so did SOXL. You can see right here, it moves from $7. Man, this is crushing. This is crushing any sort of positive attitude I might have in trading the stock market. Well, because I'm using a sector, I feel pretty good that when the market recovers, this will too. This has proven to recover over the years, regardless of where we're at. You could see when it hits the bottom, and that would be 10 of the biggest semiconductors, they always run it back, and it's very cyclical. So you can see as we get to this bottom here, October 2022, it rallies to all-time highs in 2024. And of course, it falls again. So look, I don't have a crystal ball, and no one else does either. But what we can say is this: even when they throw the baby out with the bathwater when it comes to SOXL, they rally it back. It's the 10 biggest semiconductor stocks on the planet. And to be honest with you, right now, NVIDIA is getting crushed, so SOXL will fall as well. Now, talking about this particular trade because I am in a trade right now, and we're going to give our shares away considerably cheaper than where I'm at. Or maybe not. That's going to be the plan. We are going to write a covered call, and what we're going to do is collect that premium. Now, we're hoping that the stock does not get to the strike price. I collect that premium, I keep that premium, and we move on. We look to do it again. So SOXL is the trade that we're talking about. This is the trade. So SOXL is trading right around $9.02. You can see it's fluctuating today. It was just trading on the last screen, $8.97. It's not moving anywhere today quickly. In fact, it's down 4%. Well, we're going to go ahead and write a cover call because I want to put skin in the game. I want to collect some premium. I have a lot of shares. So what we're going to do is this. We're going to go ahead and use the expected stock move calculator for a specific stock price that I feel comfortable with. Now, I show you this screen right here largely because last time it hit 11, it has tried to get above 11 twice, and it can't get there. Look at when it rallied above 11. That's when the tariff talk was put on pause, and the Nasdaq's rallying 2,000 points. Well, it pulls back, and you can see now that SOXL is trying to get above 11. That's near-term resistance. So with it now trading at 902, we bust out the expected stock move calculator, and we come up with the 11 strike price. Now, the expected stock move calculator is something we need to be living in right now if you have shares for which are underwater. Because what you want to do is have this trade, whatever covered call trade you do, kind of percolate. See, what we don't want to do right now is do an at-the-money strike thinking that it won't get there, and then maybe we get some news and it pops about 10%. Now you're 10% behind in this trade, and chances are you're going to have to buy the option back so they don't take your shares cheaper, and you're going to add to your cost basis. So I would rather use the expected stock move calculator, and we're going to pick that top line strike. And you can see right here, when you look at the numbers for next week, April 25th, it's trading at 102. We're going to plug in the at-the-money implied volatility, and in this case, it's going to be 143%. And what that's going to return in the calculator is where this stock could potentially, or where it's expected to move up or down. And that means it could fall to 710, and it could move to $10.94. There is the jewel of the Nile, because $10.94 would be the top line move for this time frame. Now, this is only 5 days, so if this thing's going to get on its horse and truly move, that would be a 21% move. Now, me having my shares taken away is scary because I'm in much higher. So I'm thinking to myself, look, this thing would have to move 21%. Now, it can move 8, 9, 10% in a day, and that can be scary if you've written a covered call. But because I picked the 11 strike, and the expected stock move based on the implied volatility right now is 11, well, I'm going to go with it. And that's exactly what I did. When the shares were trading at $9.10, I picked that 11 strike. I got 19 cents premium. I have 6,000 shares. So that's going to pocket me $1,140 upfront cash. Now, here's the deal. If this thing moves higher, well, I'm hoping that if it's going to get to 11, we can get to 11 nice and easy. What we don't want is the stock rocketing higher, because then it'd be hard to manage this trade. Because what happens is that implied volatility jacks up the time value premium. And now if I'm going to get out of this trade, it's going to be tougher. I'm going to have to pay money, a lot more money to get out of the trade. What I'm hoping for is this thing just ebbs and flows, moves a little bit higher, little bit higher, little bit higher, and gets to $11. Now, on the final day of expiration, this option, if the stock's not trading above $11, well, it'll go from 19 cents to 18 cents to 8 cents to 2 cents to 1 cent. And I'll try to buy it back. Remember, we get paid for time, and we also pay for time. So at any point I feel uncomfortable with this trade, I got 19 cents in premium. It's 21% from the strike price. If this thing were to even make a parabolic move in the next couple days, let's say it moves to 10, well, chances are, because we're in the last week of time decay, and that's when time decay really erodes an option premium, we might be able to get out of this trade for half. Even though it's made this hella move, time decay is pressuring down on that premium. It only has so much time, and every single tick of the clock, it's losing pennies. So if I can get out of this trade making $1,140, that'd be great. How about $1,000? How about $900? How about $800? Hey, I'll take it all, because otherwise I'm sitting on my hands for probably what will be 3 months before SOXL even gets close to 30. And that's how we're going to do it. We're going to use the expected stock move calculator. We're going to use the various charting, because when we look at the chart, it tells a story. And the story tells us that it's trying to break 11 even in considerably green days. So that 11 strike for just 5 days probably works out for me. We will see. But the end game, we're not having our shares taken. So I'll buy this option back either for a profit, close the trade, or I'll buy this option back, adding to my cost basis because the stock went above $11, and we will roll and do this again. So let's finish this video with a couple things. You're going to love this. The expected stock move calculator tells you how much a stock is likely to move up or down by a certain expiration date. Remember, I plugged in the date and the implied volatility at the current at the money strike, like I showed you in the video. Meaning, where the stock is currently trading. You're going to pick the strike price, you're going to pick the expiration date, you're going to look at the implied volatility of where it's trading, and then you're going to pick your strike price. You're going to use what the calculator presents. It's not a guarantee. It's what the options market is pricing in based on supply and demand, usually assuming a 68% probability. One standard deviation. Hey, all the members that are watching, you guys ask me all the time where to get this. Go to the download hub, get your free copy. It's amongst the other trackers and calculators. It's called the expected stock move calculator. Now, before I let you go, I want to show you where we're at in April. You know, March was brutal. April, we're getting back in the saddle again. And this is just this week. So today, trading closes. And this is where we're at this week. We were able to trade some things. And although I'm still down on a lot of these positions, we're trying to pick strike prices that are out of the money. I mean, look how ridiculous MSTX is. It's trading for 36.66. I write the 67 strike. Now, I did this trade a couple weeks ago just to pick up some premium. You could see there was an $8 premium there. I bought it back for $3.90. There's just way too much time left. We'll let MSTX percolate. And it's lower than 36.66, but it's going to percolate and find itself back. I bet I can get that same premium for that same expiration when we do this again. And you can also see where very tight time frames here, we're closing them within days. We're talking 1 day, 2 day. We're trying to pick up crumbs, and you can see we're doing that. The expected stock move calculator really helps us feel comfortable with that strike price we pick. Because like I said, it's pretty darn scary when you pick a strike price and this thing could move towards it. Well, with the expected stock move calculator, at least you feel that it'll percolate until it gets there, and then it's much more manageable. Now, all those profits, we need to do something. We absolutely need to do something with that tax bill. The tax man's coming, so we need to pay taxes. So the theme for 2025 is simple. It's called the tax bucket. I mentioned this in my last video, and you may have heard of it. Now, I know it sounds super simple, super obvious, but if you don't do it, most people don't do it, okay? So I'm going to remind you of this Mr. Obvious tax bucket idea. Now, I'm going to put a twist on it because I love buying a dividend-paying stock, so hang with me. My tax bucket idea is simple. We're going to go ahead and make a profit. This is step one. We're going to make a profit, and we're going to move 25% of that premium into the tax bucket. Now, the tax bucket can be another account, which mine is, or pick a dividend-paying stock that you will never sell all year. For you, that could be any dividend-paying stock, but you're never going to sell it. You're just going to buy. Well, in my case, it's going to be XDTE. So 2025, I've decided to pick XDTE. And every time I get a cover call premium profit, cash secure put profit, or any other kind of profit, I put 25% into XDTE. Now, here's the deal. It does two things. It pays the tax man regardless if you have taxes. And I know everybody's tax situation is different. And you know what? If you took losses, tax harvesting, which you know we're going to talk about this year, that's why I want you to subscribe to the channel and bang that like button. At least you're putting 25% away for a rainy day. The tax man is coming, and it's going to be a bitch when it's time to pay when you're generating the kind of money we are. I mean, that's ridiculous to be making $5,600 in a week, and this is when I'm battling. Can you imagine if all my stocks were at the money? I have had $10,000 weeks like it's nothing. Look, tax bucket idea, use it. Now, what I love about this idea, it really gets me excited. When I put that 25% in the tax bucket, I buy a dividend paying stock. So it's conditioning me to do this. It's not close an existing trade and then move on to the next trade. It's a 2 to 3 step process, and only when I complete that process, I'm done. Now I have a profit. I take 25% and put it in the tax bucket. I buy the dividend paying stock. Now I take that 75% profit and I buy the dividend paying stock that's going to let me live the good life. It's called the tax bucket, and that's exactly what I do. Come tax time, we sell the equal amount of shares needed to pay the tax bill, and that is it. You have your tax bill paid. And why do I have a feeling this year, if you did some tax harvesting, you might not have such of a tax bill. And you'll have that tax bucket full, ready for 2026. See, I love this idea. It jacks me up. I get excited. Hey, I hope I gave you a little bit of information in this video that helped you. SOXL, using the expected stock move calculator, we're going to pick that strike price at the top of the line. We're going to use it. We're going to manage the trade. And mind you, I'm down some 60% on this trade. And I feel comfortable with it. I feel good with it. Members, go to the download hub, get your own copy. And if you want to be a member, in the description below is a 1 free month offer. Last video must have inspired a lot of you to get back in the game. Had 5 new members. Tell you what, they're already knocking it down because this SOXL trade is going to hit their email and hit the phone app right after I get done here. Look, we could have the strategy of hope and pray, sit on our hands, or we could have a real strategy where we use real tools and we pick up a little crumb along the way. Hey, look, subscribe to the channel. Bang that like button. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.